Back right in the middle of earnings season, three major companies hitting the public markets in the next few weeks. A lot of hype around these companies, billions of dollars in real annual sales, and soon you can be an investor. The first one is pet food maker Blue Buffalo, which will start trading today under the symbol BUFF. Kathleen Smith is the IPO ETF manager at Renaissance Capital. She joins us now with a look at some of these new deals coming. Good to see you, Kathleen.
Nice to see you.
So this one that we're talking about today, an IPO for dog lovers?
Very, very interesting. The symbol is BUFF. I think it's a BUFF IPO. The proceeds raised were bumped up about 30%. There's a lot of investor interest in this, and mainly it's because pets have become part of our families. We want to feed them like our family with healthy food. This company is about healthy dog and cat food. The industry as a whole, it only has 6% share of the dog and cat food industry, but in the natural part of it, which is growing much faster than the overall, it's the dominant player. So there's a lot of interest in this Blue Buffalo pet IPO that will open today for trading.
So you think it'll do well?
We do. We think that investors are looking for, especially in the consumer packaged goods area, growth companies. Investors receive White Wave very well. The sector is investors are looking for growth anyway in a slow growth economy, and this company sells $1 billion annually of natural pet food, pretty good, with very strong cash flow margins.
That last part that you said is a really interesting one. I'm starting to hear it more often, but the preface to the point is the most important. In a slowing growth economy, I'm looking for the growth that I can find. That's what's really given a bid to a lot of the growth stocks or the stocks that could be growth stocks. Do you see that pipeline building or decelerating in terms of the growth stocks that are coming down the pike?
Well, there's no doubt that the overall market is looking for growth. And in the IPO market, that is where we tend to see these. The Fitbit IPO, for example, real growth.
That did well.
Very strong performing IPO. However, with the market the way it is, it's been fairly receptive, a little bit of a pullback recently. We're seeing a lot of the LBO-backed leverage companies trying to tap the market, and those are going to be, growth is going to be what investors are looking at there. So no premium for a company that doesn't show top-line growth.
We saw those private equity guys. It's kind of like, I call them the wet Kleenex IPOs. You're going to give me the old thing that I used to have that I didn't want to have, so they had to LBO it, get it out, and then they got to give it back. I mean, it's like, okay, great. I mean, I'd rather go with the BUFF. I don't care what the BUFF does. It's better than the former thing that went bad.
I think they could say putting lipstick on a pig is
wow. Well, yesterday we read about First Data filing. That's going public. Could be a $5 billion IPO.
Yes.
Largest processor of credit and debit card.
Very interesting company, very big market share in credit card processing. The dominant player, however, the growth is just meager for the company. There's only about 3% top line growth. Great cash flow, but the top line growth is at risk, and mainly because the processing industry is shifting, and there's a lot of changes happening. And I think PayPal is an example of the willingness of consumers to go online and to use a processor where they don't rely on their bank.
Talk to me about Buff for a second, because I'm a new dog owner. I've got a 9-month-old puppy. And I am amazed. When I walk into these dog food stores or the pet stores, I had never owned my own dog. This is, something new to me. I walk in the pet stores and people will spend anything on their dogs. I would imagine with this company, this natural dog food company, cat food as well, that it's all about distribution and getting into these big pet stores. I mean, it's getting it in front of people, because they'll buy anything that says organic or natural, and they'll pay whatever they're asking.
This company is very interesting. It's run by real experts in the consumer branding industry. The family that founded the company developed the beverage Sobe brand, which it sold to Pepsi for about $400 million. They're just geniuses at consumer brand marketing. Now, they took the company and focused on not the just overall Walmart kind of distribution. They're in specialty pet stores, so they're in Petco and PetSmart, and have built their share that way.
And increasingly, these people are buying their pet food and pet supplies online at companies like wag.com, so that could potentially increase their sales. But if you really want to be good to your pet, you cook for them.
I do. See? My Alabella eats as her treats steamed green beans.
And you have the time for that.
I'm Alabella's treats steamed string beans. And she looks gorgeous. She's 14.
And you have the time for that, Maria.
Exactly. Well, yeah.
You make the time
my dog.
Of
course I do. Real quickly, Univision and Albertson Safeway also going public. You're worried about the strong dollar and the impact on earnings. You've got all these deals coming. I'm just wondering if now the markets are receptive to things, but are we going to see an issue? And if we see a problem and markets slow down and we see a big sell-off, the IPO market slows down?
Well, we don't mind that too much because really the IPO market is going to find a price for the product that's coming through. So in a way, IPO investors that have been at it a long time like the market when there's a lot of fear because they'll get the price that they want. And it's better to be on the buy side, the buyer in control, than it is for the seller.
That's a good
so
point.
For these ones coming out, the Albertsons is interesting. It owns Safeway. It's got 50-some billion in annual revenue. The number 2 grocer after Kroger. Investors are going to like this story. They're going to look again for growth.
Right.
But they'll find a price and it'll be one of these low values to cash flow.
Kathleen, good to have you on the show today.
Thank you.
Thank you so much. We so appreciate it. Kathleen Smith, Renaissance. Automakers